Hi guys, welcome back to Pristine Case. Today we'll be looking at a very promising penny stock and a very promising company in the healthcare technology space called Cogstate Ltd. So this company primarily operates as a commercial services provider, and it provides services such as clinical trials and administration services to a number of healthcare companies, and a number of healthcare companies primarily operating in the neurological space or the brain space. And this actually provides the company a very strong position to generate consistent revenues, primarily as a service provider, but it also exposes the company to very promising long-term growth prospects which are visible in the healthcare space and more significantly in the healthcare technology space. So let's start by taking a look at the company's financials. So as we can see, even though the company's financials, revenue generation, and more primarily the earnings have been a bit inconsistent over the half year periods for the last few years, we can see that the company's long-term growth trajectory actually remains very stable, particularly as it has offset a loss-making position of around 2.92 million from 2020 to generate a net income of around 8.32 million during 2024, which marks a very significant contrast and a very significant improvement over a 5-year period, even though there have been some fluctuations in the company's earnings, such as it went up to 7 million in 21, then again 10 million in 22, which was actually its 5-year peak, and then again declined to 5.3 million. So these fluctuations are obviously very visible and very existent, but despite this, the company's long-term growth remains very stable. So that's a very promising factor for the investors. And we'll just take a look at the company's financial statements to make sure that the company has some sort of an operating base to back up its income growth as well as its sales growth. So a promising recent development would be a 10% year-on-year growth rate in the company's revenues, which actually increased from 60 million in 2023 to 66 million in 2024. And this also marks a 7-year record for the company's revenue generation. Apart from this, the company's operating income actually grows very extraordinarily during 2024, where we witnessed a 176% year-on-year growth rate in the company's operating income, which again remains a very major improvement by the peak observed in 2022, where the company generated an operating income of around 15 million. So clearly this has been factored down into the company's final net income, with non-operating factors not really having a major impact on the company's financials at all. So we can rest assured that the company's operating fundamentals are driving this financial growth for the shareholders. So let's also take a look at the company's balance sheet growth, and you can clearly see how the company has very significantly increased its asset base over the past 5 years or the past 7 years, where you can see that the company's assets have increased from around 46.36 million in 2020 to around 86 million in 2024, which actually again marks a growth rate of almost 100% over a 5-year period. And simultaneously, you can also observe that the company's liabilities or the company's debt have remained very stable, as it stood at around 23 million in 2020 and still stands at only 25 million in 2024. And this has actually reduced the leverage in the company's balance sheet by a significant proportion, and this kind of increases not only plays a major role in enhancing the book value for the shareholders. As you can see here, the book value per share has increased from $0.14 per share in 2018 to $0.36 per share in 2024, which actually remains again a very major improvement. And apart from this, the reduced leverage also plays a major role in providing a margin of safety to the investors, and just adding overall financial security. So again, the company's financials actually check out very well. So let's take a look at some of the company's recent developments, which can provide an outlook over its future financial performances or future operational growth. So here I've opened a small segment from one of our recent penny reports in which we covered Cogstate Ltd. And as you can see on the screen, there's a small snapshot from the company's presentation where you can see the market share of different diseases or healthcare segments or research segments within the US clinical trials market. And you can see that after oncology, which holds a market share of around 27%, CNS conditions or central nervous system conditions hold the biggest market share within the US clinical trials market at 18%. So this remains a very positive factor for the company's operational growth, since not only is the US clinical trials market and the healthcare industry growing by a very rapid pace, the high amount of market share of CNS conditions, which is exactly what Cogstate serves, also remains very well positioned to capture the highly growing demand within the overall healthcare industry and the research industry itself. So that positions the company very well for future sales growth and operational growth, and notably being exposed to a market size of $25 billion with not many players who can boast strong research capabilities. And the competitive pressures are usually not as much as you would find in other industries, as research actually takes a lot of expert capabilities and expert labor and expert workforce. So these factors overall reduce the industry competition or the segment competition. And Cogstate's expertise in this industry for a long time actually provides them the opportunity to deliver significant sales and revenue growth over the next 5 years or the next 10 or over the next decade, which can actually position this security as a potential multi-bagger. So again, this chart also shows us a very promising insight into the company's future revenue generating scope, where the company's contracted revenue runoff or the company's overall backlog. So this chart basically showcases the timeline during which the company's backlog will be realized. So in F125, the company is planning to realize a significant portion of around 35 million or so, while this is expected to reduce to a certain degree by FY28. But overall, you can see that the company's existing backlog is enough to support revenue generation at a significant scale over the next 5 years till F129 itself. And the ongoing security, as the company secures more contracts, it is actually even more well positioned to increase the overall backlog and the contracted revenue for the future. Okay, so now let's take a look at the company's charts, and you can see here that the company we actually recommended this stock when it was trading around 99 cents or so, and was actually testing its shorter term 14-day EMA on the weekly chart. And as you can see that the security has already broken through beyond its short term 14-day EMA recently, which could potentially suggest the start of a promising uptrend for the security. And simultaneously, an RSI of 55 showcases a very stable market buying sentiment, and You can see here that the RSI usually rebounds from these around close to the oversold zones at around 30, and this has been observed a few times in the past. And given the company's major fundamental developments and improvements recently, where you can see that the company has actually delivered sustained revenue growth over the long term, while its earnings have also improved recently, you can take assume that the company will be able to, or the stock price will be able to perform well compared to 2023, where it was rebounding from an RSI of around 50 and having already broken through beyond this. The company is expected to, or the buying momentum is expected to go and maybe reach the oversold zones at around 70 or 72 or so, which, and during this the stock price would actually experience a very significant jump if the RSI does indeed reach the overbought zones at around 70 or so. And another promising factor is the fact that the security has also recently rebounded from its lower Bollinger Bands and has retraced to its shorter term EMA, and is probably expected to reach its upper Bollinger Bands over the short term as well. And another key driving factor, or another key factor which provides a very strong investment thesis in this security, is the fact that despite the company maintaining its overall growth trajectory in over the long term, and particularly in comparison to 2021, and even though the company 2022, and even though the company's earnings and financial performances do not exactly fare well in comparison to its levels observed in 2022, the decline in the stock price has actually been far more significant than the decline in earnings, and this actually provides improved valuation prospects to the investors, because as you can see here in the valuation part, you will observe that the company's P ratio, which was around 33x in 2021 and 54x in 2023, and still at 26x in 2022, even when the company was performing at its earnings peak over the past 5 years. The P ratio still stood at a significant 26x, and if you look at it, the company's P ratio had recently gone down to around 20x when we gave out the recommendation, and still remains low at around 22x, which showcases a very significant undervaluation compared to the historical levels of the company. And you can expect that with sustained earnings growth, and even with modest earnings growth, the company will maybe retrace to its historical averages in terms of valuation. And this actually provides a very strong upside for the security, where a recovery in earnings over the next year or so above the 10 million mark, which it actually remains very close to, and given the company's recent operational developments and clinical trial developments, as well as the growing demand for clinical trials in the neurological space, you can expect that the company will eventually be able to reach the 10 million or cross the 10 million mark over the next few years, which can actually and potentially provide a major bump to the stock price to its levels observed in 2022, which would actually and potentially make this security a multi-bagger.